Welcome back to Bazaar Morning Call. Well, there are plenty of stocks in focus this morning as we begin a brand new week of trade. Our research team is with us to give you the list of top 10 stocks. So let's kick it off with some banks. Now, HDFC Bank and Kotak Bank on our radar. Abhishek is here to give us the latest. Abhishek, over to you.
Good morning, Sonia. So, SDFC Bank over there, RBI has approved stake sale in SDFC Credila, wherein the bank intends to sell about 90% stake. As of FY23, Credila had a total income of 1,352 crores with a PAT of around 276 crores. Their outstanding loans that grew by 73% YOY, while asset quality improved as gross NPA value was down 50% YOY. In Kotak Bank will sell 70% of Kotak General to Zurich Insurance Company. Earlier, the transaction was to happen in two tranches of 51% and 19% over the next 3 years, but now it's happening at one go. Total consideration is about 5,560 crores. Jefferies has written a note. They have a hold rating and a target price of 2,050. They say that this business is small, 0.5% of the premium market share and 0.3% of the net worth, and it had incurred a loss of about 120 crore in FY23. Valuations are unchanged with respect to post money. The market cap would be around 7,900 crore and higher than their own SOTP, which had valued this company at about 5,400 crore. However, this implies just 1% to the SOTP due to the small size. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Vamakshi joins us to tell us more about Reliance and Disney deal. Morning, Vamakshi.
Well, morning, Nigel. Reliance Industries, as per Bloomberg reports, has signed a merger pact with Disney, and this is to merge their media operations in India. The deal is likely to be announced early this week. Now, keep in mind that we have not verified this report independently, but nevertheless, the report suggests that RIL's media unit and its affiliates could own at least 61% of the merged entity, while the remaining will be held by Disney. The stake split, however, may change depending on how Disney's other local assets are factored in. Now, moving on to the valuation, then, as per a recent report by Wall Street Journal, the report suggested that the deal could value Disney's India operations at nearly $3.9 billion or 32,000 crore rupees. And in fact, additionally, Reliance is also mulling over the acquisition of Tata Play Limited, a broadcast service provider in which Disney holds a minority stake. So on the back of this news report, keep an eye out on TV18. I expect it to open in the green.
All right, Vamakshi, thanks very much for that. Well, let's talk about SBI card, where I think it's not very good news, loss in market share there. And Paytm, on Friday after market hours, the RBI sort of issued a circular, lastly, to ease transition for consumers. Abhishek is here with the details. Abhishek, back to you.
Well, Prashant, as you mentioned, in cards, SBI cards momentum, it looks like they have lost market share both YOY and month on month. So overall, cards grew by 14.8% YOY and about 0.7% month on month. Spends was strong on a month on month basis. It was up 26.3% YOY and up about 4.9% month on month. This meant that the average spend is up 10% YOY and about 4.2% month on month. In terms of market share, overall cards market share declined to 18.7% when compared to 19.66% in the same month last year and about 18.9% in the previous month. Spends, market share is at 18.4%. It has declined on a YOY basis. Last year, same month, that is for January, it was at 19%, and the previous month, it was 17.7%. So month on month, there is gain in spends. In terms of Paytm, RBI has advised NPCI to be the third-party application provider for UPI channel. So this is to ensure UPI operations of Paytm as per norms. They are awaiting with respect to NPCI's response for this request, and this can remove one of the two regulatory concerns overhangs other than being the ED investigation for Paytm. Analysts do say that Paytm's business model moving towards a pure payment company, and the focus will now shift to smooth transition and rate of user and merchant retention that they get post this news. Back to you.
All right, thanks a lot for that. Well, Dixon Tech is the other stock that we're looking at this morning. Upasana has more details on why you should be watching this one. Upasana, over to you.
Well, the company's wholly owned subsidiary, Packet Electronics, has entered into a contract manufacturing agreement with Compal Smart Devices India for manufacturing of mobile phones. Mind you that Compal is one of the world's leading manufacturer of notebook, PCs, smart devices, data center equipments and LCD products. Now, also the company has also launched a new unit in Dehradun for manufacturing of washing machines.
All right, thanks a lot for that. So Dixon Tech is in focus on the back of that news flow. But Rain Industries came out with their numbers, so let's find out how it looked. Sonal is here with the fine print. Sonal, over to you.
Good morning, Sonia. Well, these were the Q4 calendar year 2023 numbers, and they looked weak. Revenues declined 1.5%. There was an EBITDA loss of 600 crore rupees versus an EBITDA last year of 366 crore rupees last quarter, that is. And the loss came at 1,078 crore rupees versus a loss of 66 crore rupees. Couple of reasons why this loss was higher. There was an impairment loss of 751 crore rupees in this quarter. Even barring that, there would have been a higher loss. The tax expense was higher to 995 crore rupees versus 462 crore rupees on a sequential basis. The company does say their carbon segment was impacted because of delayed shipments. There was margin contraction as well. Their advanced material segment impacted due to seasonal reasons, but their cement segment improved due to better volumes. But overall, it's a miss when it comes to Rain Industries numbers.
All right. Thanks very much, Sonal, for that. Sanofi fourth quarter numbers and Suven Pharma are in focus. Ekta's got details here. Ekta.
Thanks. I'll start with Sanofi. The revenue was up around 3% margins improved to 27% versus 25%, and the profit was up around 5%. So overall, okay set of numbers. Margin improvement will probably aid the stock in today's trading session, not to mention that a lot of these MNCs have been in focus in any case post the Novartis news. Now, Suven Pharma, I expect that stock to be in the green because the US FDA completed a pre-approval inspection and an overall inspection of their API and formulation facilities in Hyderabad. No Form 483 was issued, was inspected from Feb 12 to the 23rd of Feb. So you can expect that stock to be in the green.
All right, thanks for that. Well, Vivek is joining in to tell us about JSW Infra and why you should be watching that one. Vivek, good morning.
Well, good morning. One more order win coming in as far as JSW Infra is concerned. So the company has got the letter of award from the V.O. Chidambaram Port Trust. This particular award is for going ahead and mechanizing the North Cargo Berth 3 for the handling dry bulk cargo. So some more volumes coming in as far as JSW Infra is concerned. This particular award or this particular project will be done through the DBFOT basis through PPP business. That is the design, build, finance, operate and transfer basis. Positive for JSW Infra. The stock has been on a tear in recent times. Some more positive news flow coming in.
Okay, all right. Thanks a lot for that, Vivek. Well, let's do a quick recap of all the stocks we just covered for you. Stocks with positive news flow include HDFC Bank, Kotak Bank, TV18 Broadcast, Paytm, Dixon, Sanofi, Suven Pharma, and JSW Infra. While a couple of stocks with negative news flow include SBI Card and Rain Industries.